Markets with Noelle Acheson, author of the Crypto is Macro Now Substack. Hi, Noelle. It's so good to have you back.
Maggie, so good to see you. And so much is going on, so much to talk about. I don't know how you keep up with it all.
I know. Well, listen, I think we all feel like that, right? We all feel overwhelmed, but it is also a really fascinating time, and sort of intellectually stimulating time, and especially for the area where you sit, which is right at that junction of crypto and macro, because we talk about both. We're going to tackle both in this next half hour as well, but there's so much being driven out of Washington and so many cross currents in the market. So your Substack is always so helpful for helping me sort of sort it out and know what to think about. So I hope we're going to do that for everybody a little bit today. So just this week on investors' plates, we have inflation data. We have talk of new steel tariffs. We have Powell testifying, which is, I'm sure going to be a lot of fireworks given the environment in Washington. And interestingly, we had US stocks higher, Bitcoin and ETH slightly higher, bond yields pretty flat, 10-year around 4.5%. So it looks like the markets are in wait and see mode. But what's top of mind for you?
For me, what's top of mind? Two things. One, markets generally may be in wait and see mode, but there are some fundamental shifts going on that we're not paying, in my opinion, enough attention to. And one is obviously the gold price. And the other is the lack of enthusiasm in the crypto markets. Now, yes, they're up slightly, but get this, Maggie, gold has outperformed Bitcoin so far this year by a factor of more than two. I mean, that is very unusual. Gold is the boring safe haven, right? And Bitcoin, not only is it the edgier safe haven, the one that appeals to the new generation of investors, but it is the one that has the tailwinds behind it, such as regulatory thaw, not just in the US, but around the world, such as growing institutional interest, not just in the US, but around the world. So there are some very contradictory messages coming out of the market that are both pointing to fundamental investment preference shifts and lingering uncertainty.
Yeah, that's so interesting that you bring that up. Hi, everybody in the chat. Start of another week. Buckle your seatbelts. If you have a question, drop them in there because, as we know, Noelle covers it all, which is so exciting for us. So, let me ask you a question about that sort of disparity in performance. Do you see it? It seems like you see it as a lack of enthusiasm in crypto around Bitcoin. Could it also just be hesitancy still? That even though it's boring, what you know is what you know, and, when people are feeling like there's so much uncertainty in this environment that rather than sort of take a chance, they're just a bit risk averse into going into something new like crypto. What do you think's happening there?
I think you hit the nail on the head there. I'm hearing a lot of doom and gloom in crypto corners because Bitcoin is not rocketing. It's
Mm,
disappointing pretty much everyone who was expecting that by now we would be having some movement given the new environment it's swimming in, given the new waters, given the tailwinds accumulating behind it. And yet Bitcoin really hasn't been doing very much since the beginning of the year. It's up less than 4%, I think. And this is leading many to feel thoroughly depressed because their expectations were high. It's leading others to think, okay, this is the top of the cycle. And it's leading many more to express frustration at the current administration that it's not doing more to pump
mm.
the Bitcoin price, regardless of the fact that's actually not the administration's job. But anyway, I think that's the main thing. You hit the nail on the head when you said it's not really yet seen on a global level as a safe haven, despite the best efforts of BlackRock to paint it as
Mm.
such. Bitcoin is not that easy to understand, as you know, as everyone watching knows, I'm sure. It is many things. It is a safe haven to some, it is a risk asset to others, it is a payments channel to some, it is a new technology to others. And yes, gold is simply easier. Gold is not something your compliance department is going to have a problem with. Gold is not something you need to rewire your custody procedures for. So I think that is the main thing at the moment. Well, I think what we're seeing in the crypto market is not so much depression, not so much misery, not so much a lack of interest as a lack of conviction yet.
Mm.
Takes time. This is not anything strange. It's certainly nothing that we've not seen before in crypto. Cycles do take some time to get going, and this one is going to be absolutely no different. Institutions are still getting their heads around it. They're going to be thinking long term, they're going to be doing their homework, and they're going to be reworking the right processes and getting compliance teams on board. Retail are going to be waiting for frothier headlines, which we just haven't had yet. So
Yeah,
the current underperformance is nothing, in my opinion, to get upset about, despite what you might hear in crypto corners.
yeah, 100 Air just said, Noel, give us good news." So I think you might be feeling a little bit of that frustration, or she may be feeling a little bit of that frustration. You just brought up such an excellent point, and it's kind of the friction. I don't wanna call it the onboarding friction, but the friction of ease of use, right? So I if you get a chance, just the episodes are coming out there on Apple. Have a look for Evolving Money. I just, hosted a four-part, series for, Coinbase and Bloomberg, that is looks at the history of developments of financial innovations and then sort of compares it to Bitcoin. It's a really, really fascinating way to look at it because we take so much for granted, right? Like, we bank online, we don't think anything of it. I mean, I do most of my banking from my phone now, I don't even do it from the computer, and it just seems super intuitive and super easy, and but it wasn't like that. I mean, I one of the guys I interviewed launched the Royal Bank of Scotland app, like one of the first banking apps, and it was like, and it's amazing to think about how far we've come. Do we just need those bridges at this point, Noel? Do you think that would be the sort of next step that maybe unleashes a lot more, entrants or draws a lot more people into crypto? Because it's not that easy still.
No, it's really not. Custody is very hard, especially when you're talking about a bearer asset. However, there's two threads to pull on this. One, the custody with crypto, unlike with traditional securities, custody of crypto, it's a technology.
Mm.
And technologies evolve. Whereas with traditional securities, it's a process. It's not as much a technology. And processes tend to, one, be slightly more flexible, and two, actually have someone you can call when things go wrong. They can fix mistakes. With the technology that is crypto custody, it's not quite so easy. However, it is improving. Technology for crypto custody is improving all the time. But the other thread to pull on is it's about more than the ease of use, it's about comfort. And I'm going to take a step back here and go back to the inflows that we're just not seeing. Any bull run is driven by new inflows of money. And while we do have some, and MicroStrategy is still buying hand over fist, and the ETFs are showing very healthy inflows over the past 5 weeks, from what I gather, they're still not the big new inflows that we really need to get the run going. And again, bull runs are always driven by big new inflows. And where are those inflows going to come from? Two sources. One are the institutions, and the other are retail. Retail, we already talked about, they're not ready yet. They're not
Mm.
seeing the froth in the headlines because the price hasn't been doing very much. Institutions are going to be first. Retail always comes afterwards. Institutions will come first. That'll be the wave that gets the bull run going. And what are institutions waiting for? They're waiting for comfort. They're waiting to be able to custody their crypto with familiar names. Now, there are many excellent institutional quality, institutional grade crypto services out there, and Coinbase is one of them. There are others. And they are good. They have excellent people. Many institutions, including most of the ETF providers, are using them. But if you're a mega institutional asset manager, you want to use BNY Mellon, you want to use State Street, you want to use who already is doing the
Mm.
custody for all of your other holdings. You want that level of comfort. And even if you personally don't care, your compliance team will probably care, your shareholders might care. So when we see the large custodians tiptoe into this market, then we will be getting some more institutional interest. And that is going to be coming soon, especially now that we've had the repeal of the ridiculous SAB 1-to-1 accounting guideline from the SEC, which blocked banks from doing precisely that.
Yeah. Yeah, I just went down the rabbit hole on that, and it was super fascinating. So there are a lot of changes in the sort of, like, mechanics that maybe a lot of us don't pay attention to, behind the scene. So do you think hi Phoenix. Hi BMAC from Phoenix. Do you think that we are going to be in a consolidation period until we start to get some of that happening?
I think so. It's easy to say, I think so, because that's what recent history is going to show us. But we also know with crypto markets, things can change so fast. And I'll confess, I have in the past said, yep, Bitcoin's now a stable coin. And then it moves like to 10% the following day. So I do think that right now we just have to wait. The tailwinds are strong, the environment is good. It just needs the spark to get it going. And that could come tomorrow. It could come 3 months from now. It could come during the summer. We really don't know. What we do know is that it is going to be coming. Now, we know how slow Washington, D.C. works, but we know that the will.
Usually.
Usually,
We
that's
don't
true. It
know
does
now.
seem to be going faster. But, even best case scenario, it's probably going to be a while before there is the crypto clarity that we've all been clamoring for. And when I say a while, I'm talking about months, and months is nothing compared to what we've endured over the past few years, but still quite months. But we can't we can't forget the press conference last week was just mind blowing. There you had crypto AI czar David Sachs at the podium. But who was behind him? You had the heads of the agriculture and financial committees of the Senate and the House. I mean, that has never happened before, having all those people showing support, showing up to give support to crypto progress. Yeah, that was pretty amazing. And yes, that does suggest that they're going to be working quite fast, but it's still not necessarily going to happen overnight. But where I was heading with this is that crypto is a global asset. We're not necessarily going to have to wait for the US news. It's the biggest financial market. They are the big players. We do need that. But meanwhile, there are central banks sniffing around holding the idea of holding crypto, Bitcoin specifically, as part of their reserves. All it would take is one public announcement that, say, Saudi Arabia, the United Arab Emirates, have been accumulating. And again, I don't have any inside information, but it wouldn't surprise me at all. So the good news that would take to kickstart the institutional interest could come anytime from anywhere in the world.
Mm.
Obviously, the US is what we're scrutinizing at the moment because that does have the biggest potential to really move things along.
Yeah, that's such a great point, and this is why we also continue to talk about geopolitics too, because all of this is tied together, and that's why I know you watch it all. But these things are influencing each other as we talk about the potential of a more multipolar world. Boris is asking, and I completely agree with them on this. He says, highly recommend Noelle's newsletter today. It was such a good piece on the relationship between gold and Bitcoin. We were just talking before we got on
Thank you,
air.
Boris.
His question is, what is Noelle's opinion about a combination of gold and Bitcoin for 2025? And before you even answer that, can you talk a little bit? You mentioned that gold outperformed, and people are seeking that safe haven and not Bitcoin because there's still some reticence and maybe a little bit of PTSD from the sort of past cycles in crypto. But you were pointing out that the sort of functioning in the gold market has been an issue, and some of the when you compare the way it works, gold versus Bitcoin, it's very interesting. Could you just give us a little oversight of that? So because we have a lot of people here always interested in hard assets.
Absolutely, and it's so crazy what is going on. But quickly to answer our question, yes, obviously, Bitcoin will never replace gold in portfolios. Gold is, it's the OG of safe haven assets. Bitcoin is a complement with an edge. It's a complement with an edge because it is also many other things. It's a complement with an edge because it does represent new technology and it does appeal to a younger generation. But complement rather than replacement. Now, going on to what you're asking, Maggie, about the gold market. This is something I've spoken about often before, that Bitcoin is, in my opinion, a better safe haven than gold simply because it is more transparent, it is easier to store and transfer, and it is also boosted by many other narratives. And we're seeing this play out. And again, I'm not advocating for Bitcoin substituting gold, but we're seeing the differences play out now in real time. I don't know if any of your viewers have been following, well, the gold price, obviously, but the difference in gold prices now between the UK and the US. There's been a flood of gold leaving the UK, especially the Bank of England vaults, to go over to the US, driven by two things. One, fear of tariffs that would obviously make the transport of gold more expensive unless there is an exemption carved out for silver and maybe, and sorry, gold and maybe silver as well. And there's also a growing demand for physical delivery of gold futures. Now, London is the world's largest gold market, but most of the derivatives activity takes place in New York, and most of the derivatives activity just rolls over. But suddenly, there's a huge demand for physical settlement. So somehow they've got to get the gold over there. Now, this is not as easy as it sounds because it involves packing up the gold bars, putting them in boxes, loading them onto trucks, driving to the airport, and then flying them over. And there's limits on how much they can fly over in any given time because of insurance considerations. Plus, the Bank of England is, and this may come as a surprise to many, it's kind of old fashioned and they don't have sophisticated systems for loading so much gold in a given day. There's a backlog now, apparently, according to the Financial Times reporting, of about 8 weeks. You heard it right, a wait list of 8 weeks to get your gold out of the Bank of England vaults. This is pushing up borrowing rates because you need the gold. You can't get from the Bank of England, borrow it. Borrowing rates are normally negligible because gold is safe. They're now around 10% annualized, which is ludicrous. And gold bars in the Bank of England are trading at around a $5 discount to the spot price. And again, this is crazy for such a systemic asset. And it just highlights how the gold market having to depend on physical delivery is not efficient. And that's even before we go into the whole transparency question. The Bank of England has never published an audit of how much gold it has. Same with the New York Federal Reserve, which is the largest custodian in the US. They have not published an audit ever of how much gold they are holding. They say for confidentiality reasons, and that does make sense. But we don't know how much gold is in those vaults, which is a reminder that we don't know how much gold there is in the world. So, can we really call it a safe asset? Whereas with Bitcoin, not only can we track custody without violating, obviously, any confident, without the sensitive information, but we can also, anyone can check at any time exactly how much Bitcoin is in circulation. So,
Yeah,
this,
it's
this episode,
fascinating. It
it
sounds I mean,
is.
doesn't it sound like a heist movie, people? I see a heist movie here. I
It's
think they made one
crazy.
before, by the way. I think Bruce
And
Willis was in it.
it's actually crazy. I've seen some headlines saying that the London bullion market is defaulting on it. It's not. I mean, there are some crazy headlines out there. It's just that the Bank of England is old-fashioned and it's not handling the redemptions or rather the export requests
Well, because
in a timely
as
fashion.
you point out, it's unusual. We don't usually have physical, delivery, so this is kind of
I even heard one central banker, one UK central banker, use the excuse they couldn't. There was too much traffic. They couldn't get the lorries through to park right in front of. I mean, it is
and this has
absolutely insane.
disaster written all over it, by the way. Like, I'm
And
joking
yet,
about the heist movie, but this has disaster written all over it. Uh,
absolutely. And yet here we have a digital equivalent that not only is the same anywhere, there's no discount because you can't get it out. You can send it across the world with a few clicks in minutes,
Right, you could
maximum.
see
Yeah,
the efficiencies. When people talk about efficiencies,
absolutely.
this is what they mean. David
Yeah.
brings up a really good point and question. He says, "As long as the 10-year US Treasury is over 4.5%, Bitcoin won't be going up." Will that
That's possible. Yeah, I can see some logic to that. However, I wouldn't hold on to it, in my opinion, as a hard and fast rule because we do, as investors, have a tendency to get used to new base levels. And I've been saying before, I think Maggie, you and I talked about this before, that I do think we are going to see yields higher for longer. And I think that's just going to become the new normal.
Mm.
However, that said, 4.5 is kind of high and it should come down from there. But I don't think investors are going to wait for piling in given the decreasing available supply because if people are buying to hold then there's less easily available there's less ready supply for new investors. I don't think people are going to be putting it off for the sake of a few basis points.
Here's another correlation I'd like to get your thoughts on. BMAX, is saying when the Russell breaks out, crypto will also break out. Is that a correlation you see?
Could be, and it's tied into the previous question. When yields come down, that is good for assets, full stop.
Mm.
Not just risk assets, but pretty much any assets, because lower yields is again going to be excellent for any capex valuations and funding. That's going to boost even boring stocks. So it's again, it'll be good for pretty much everything, but not necessarily because Bitcoin and stocks are correlated. Sometimes they are, sometimes they aren't. And
Yeah,
it's
because
going
it
to
used
be
to be the
it's all tied
NASDAQ
up.
that we talked about.
Yeah. Indeed, it's all tied in. I think it'd be the same correlation could be applied to the Nasdaq. I'm very skeptical. This is a parenthesis here. I'm very skeptical about correlations generally because we can manipulate them to tell us any story we want. You just choose your time frame, you choose your volatility index, etc. They can confirm rather than give insight, if you know what I mean.
Yeah.
Plus, they change, and that in itself is exciting, but in my opinion, not that not worth spending that much time. And I used to be a great correlation buff. I used to work them out on spreadsheets and things like that. But I've learned that you can twist the framework or the time frame and the parameters to tell
Yeah.
you any story you want. I do think that the yields is going to be a big part of driving moves overall, but not necessarily the only driver, which is where we could see some of the correlations break down. Because as we've talked about, Bitcoin, for instance, does have many other things going for it other than the yields and potential liquidity.
Yeah, maybe one point on a dashboard, that you can keep an eye on, but
Yes,
you've gotta look across the entire
indeed. It would
you
be
mentioned
good for the market, but not essential for it to move.
you mentioned bonds, and I'm interested to hear, so we've got some inflation data coming up, and there's so much unknown, of course, which will be backward looking for sure, especially given the fact that we're just trying to figure out the impact from tariffs. Some people believe they're inflationary, some people believe they are not. I have people talking about an environment where things could look deflationary, and yet we know that we have many people who believe we're just in a higher inflation environment. So this inflation question seems to be very confusing, and people are kind of all over the place on their with their thoughts on, or in different camps on this. What are you expecting from the US economy and inflation?
I have been in the higher for longer camp, as I mentioned, with yields and with inflation. I have been saying that I don't think we're going to get inflation below 3%. And I think we're just going to get used to that. However, when you get new information, it's quite okay to change your mind. I haven't fully changed my mind yet, but I am open to the idea that I might be wrong there if Scott Bessent manages to achieve his 333 policy. If we do see more oil production in the United States, for instance, that could bring down energy prices, which will feed through to price levels broadly, even just at the core level, which typically strips out energy prices because pretty much energy feeds into pretty much everything. And if so, we could see inflation come down. Then again, you've also got the impact of tariffs, which could lead to a stronger dollar, which would also perhaps bring down inflation, making imports cheaper once the tariffs have been offset. We don't know. We just basically don't know. For the tariffs to not be inflationary, going back to that point, because it is very relevant, the US dollar would need to appreciate quite a lot, which is
Mm.
not necessarily in line with the administration's stated objective of boosting national industry. So that is, we just don't know. We've never been in this kind of level of uncertainty before with this kind of an economic policy. I'm looking forward to seeing some of the outputs, but at the same time, I think meanwhile, uncertainty is going to be driving the safe havens, like such as gold. It is going to be keeping bond yields higher, and it is going to be having a big question mark over other risk assets such as crypto and some other stocks. But were we to start to see some impact of the 333 policy, if we do get inflation heading down and we are able to reduce some of the spending and we are able to boost GDP while the deficit is under control, then that could indeed bring inflation down. I am starting to come around to the idea that yes, we will get some Fed cuts this year. I've been saying I don't think we'll get any. I'm
Mm.
now thinking that we will. I'm modifying my opinion there.
Very interesting. It is like trying to tell the future, and that's the problem, but it's interesting that you're now at least considering a probability where there is success, even with all the challenges of executing that really, fine line. There's a lot of things that seem contradictory when you're trying to achieve all those things at once, but very interesting that you're thinking, "Okay," because that's a question. Someone said, right, "What if it all goes right?" Like, what happens then?
Exactly.
And
Exactly. We're so used to thinking it was all going to go wrong. And let's face it, the negative headlines do get more attention. So that's what we're fed. But that's a fascinating mental exercise that I've been indulging in recently. What if this works? What if everything does start to look good? And it's a strange feeling to find
yeah.
yourself thinking that way.
I think
But
it's important to do that, though. We say all
yeah,
the time. And in the same vein, okay, what are the things that could go wrong, right? This is just the sort of what you have to do in this environment when there are so many uncertainties. We have a question from Ralph, and I want to get this in. We're going to pivot back to crypto. What's Noelle's view of ETH? There was a rumor of a fund blowing out. Have you heard? Has she heard anything about that? And just generally, how are you thinking about ETH here?
I've heard that rumor. I haven't seen anything to corroborate it, and I've heard that rumor from people who are just looking for, largely from people who are looking for an explanation as to the flash crash that we had last week. So maybe, but I don't have any information on a fund blowing out. As for it's just it's being neglected. It's feeling very sad, and the reason is it doesn't really have much of an investment case at the moment compared to something like Bitcoin and compared other more fun things such as meme coins. And that's not to diss ETH at all. In full disclosure, I do hold some of both. It is largely just part of the zeitgeist that it's swimming in. ETH has a lot of uncertainty over its tech future. It has a big upgrade coming up soon,
Mm,
but no one really expects that to change the tokenomics. Supply has been climbing up because transaction activity has been fairly low. And the mood within the community is kind of down at the moment, and that obviously impacts sentiment. I think ETH could benefit from any regulatory change, such as the SEC approving options on the ETH spot ETFs. That would be a big deal. That certainly helped the bitcoins. Or if the ETH spot ETFs are allowed to distribute staking yields to
mm,
holders, that would also boost interest in them. And clarity around staking contracts more broadly, which will be coming, that could also boost some of the institutional interest in ETH, because one thing we know institutions love, that's yield. So I think ETH will be okay. Will it outperform other assets? That I just don't know. I don't really see it in the short term, but I'd love to be proven wrong there.
yeah. This question was up further when we were talking about gold. We're jumping around here a bit, but there's such good questions today. Thank you all. Jim asking, isn't gold price being driven by China's central bank buying? I think it was Kevin Muir who was on with us. I can't remember, but somebody said if you're buying, if you're in gold, you're playing poker with the Chinese central bank. Do you think that's the major influence on it, Noel, or do you see it differently?
I see it differently. I don't think China's central bank are buying. They've been buying now for the past 3 months, having had a gap of about 6 months. But for context, in 2024, the World Gold Council put out a report just last week. So this is why I remember 'cause normally I have a terrible memory for data, but I was just looking at it yesterday. In 2024, China's central bank bought 44 tons of gold, whereas Poland's central bank bought more than double that.
Wow.
China is certainly not the world's largest, China's central bank, I should say, is certainly not the world's largest buyer of gold anymore. I think in the World Gold Council central bank list, it comes eighth, seventh, or eighth. So, no, China's central bank is no longer calling the shots there. But I don't know if any of your viewers saw this morning in Bloomberg a headline saying that China has announced that it is going to, for the first time, allow its large insurance companies to start buying gold to diversify their assets. They're allowed to buy up to 1% worth of their assets in gold. And that, to put things into context, I can remember China bought 44 tons last year. That would be about 280 tons. In other words, orders of magnitude more were they to execute on that opportunity in over the course of 2025. We just don't know if they will, but the fact that they can reminds us that Chinese central bank is big, but it's not the biggest player in the market. The insurance funds, that could make a very huge difference.
Wow, that is so interesting, and I know you put that in your note. It also makes me think, what would they buy gold instead of? Would they reduce
Exactly.
their investment flows elsewhere? And if so, where does that money move away from?
Yeah. The answer to that is probably US Treasuries.
Mhm. So this is also where treasuries get so complicated because we talk about inflation of all that, but there's a massive supply and demand issue, right? I
Yes,
mean,
there is. Yeah.
we have so much supply coming and we have less international players buying treasuries. We
Yeah.
don't know the extent, but the trend is moving away from that.
D Certainly at the government level, but at the private level, there is still a lot of demand. By private, I mean the large corporations, the investment funds, the insurance companies around the world that are still buying quite a lot of US Treasuries. And I think we're probably going to see, in my opinion, more of that this year because it's a safe asset. It's a safe
Mhm.
asset. Things are uncertain. And again, your compliance department is not going to raise eyebrows if you're going to be adding US Treasuries. Now, another thing is going back to the geopolitics lever here. I don't know if you remember the interview that Scott Bessent, the Treasury Secretary of the United States, gave to Bloomberg, I think it was last week, in which he sort of laid out the strategy that he and President Trump agree on, and that is they want to bring the long term yield down. And they're
Mm.
going to do it whatever it takes. And how are they going to do that? By convincing, perhaps, some trading partners to invest more. If they invest more, the price goes up, the yields come down. And this is one of the reasons why I think, despite criticizing the emphasis that former Secretary Yellen put on the short end of the financing curve, financing mainly through bills, they didn't change it in the latest quarterly refunding statement, which was put out last week. No move. Understandable, you don't want to rock markets so soon, but the guidance said that they were going to continue with this for the foreseeable future as well. So, despite criticizing the emphasis on short term, they're still not moving to the long term because they want to keep yields down. And I do think we could end up seeing more buying of the long term, included perhaps in some of the tariff negotiations.
Yes, this is that the now famous negotiating, and this is again why things are so uncertain. Noelle, such fantastic stuff. I know we only scratched the surface, but I love that we got a chance to talk about some of the sort of rabbit holes that you've been going down and sharing it with everybody because I think it's really, really important to watch. And there's so many headlines. It's easy to miss some of this stuff and miss some of these headlines. So appreciate you sharing it with us.
Always so much fun to talk to you. And thank you, everyone, for the excellent questions. Seriously.
Yes, on fire today, starting the week. This is a sharp crew. I love it. Thanks so much. We will, of course, as always, put a link for Noelle's Substack in the comment section if you want to go check it out and subscribe. We're on Substack as well. You can find us there. And if you are not in the chat and you want to be, just subscribe and you can jump in here. We'll be back again on Wednesday with Tony Greer, who I'm sure will have a lot to say. So please join us then. In the meantime, everybody, take care and good luck out there.
Thanks, everyone. Bye.